Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Okay, let's go back to analysis of the gold market. Here you can see on the daily chart we do not have something to discuss. Mostly market is forming tight consolidation, so major activity stands on the intraday charts. In general, by taking a look at some other markets in cross-market analysis, we could see that on the 10-year yields, rising of the yields have stopped, taking the pause. So that's probably understandable at the eve of the CPI report. Also, important auctions, as I said, should happen this week on 10-year and the 30-year bonds. Auctions and yields will make really sense. So currently yield is calling around 4%. But in general, the shape, as you could see here, where at least right now, it looks like the pennant, which is a potentially bullish continuation pattern. It means that, well, based on this pennant, suggesting that we could get some continuation, a higher upward action on the yield. Meantime, on the dollar index, we have the same pattern in place, which is a hand shoulders, and both patterns, as on the 10-year bonds, as on the dollar index, you could see that hardly supportive for gold, because it suggests the rising of the United States dollar. From that standpoint, chances for the downward action on the gold still remains, despite that we see this upward bounce here today. In general, this pullback brings no big changes to the lower time frames, because on the follow time frame chart, take a look. Yes, probably it is difficult to call this type of action as a butterfly. Mostly it's done reminding some kind of the triangle consolidation. So I just keep this shape of the butterfly because all swing stands inside of this one, and mostly it has the same target rate below the market. And currently this pattern has probably more bearish features rather than bullish. Why? Just because first of all, it stands in the lower part of the high wave pattern that we have here, right? So near the lows. Second, we have uncompleted OP slightly below the market, around 20 even in 2010 areas. We already talked about this. And here market is start getting some signs of the bearish dynamic pressure, because trend shows bullish direction MACD, while the price action stands flat inside of the triangle. Usually it suggests some kind of the downside, attempt of the downside breakout. On the lower time frame on the hourly chart, here's some thoughts on the recent picture that we have discussed. So with this level that we already specified, it already has been tested twice, and it's obviously was lots of chances to move stops of the break even for those who have taken short position here. So even could be done twice. So first entry here, let's pull back another one. Now market is coming higher. But take a look, while market stands flat, the slope of the channel is moving forward. And that's why, as you can see, the upper border is gradually decreasing in value. And if even we suggest here some kind of the ABCD performance, it comes directly to the upper border and the 2045 area that we have specified previously. So if you have shorts and you keep them, you could keep them. So just move stops to the break-even, as I said, if you have taken position around this area. If you do not have it, you could wait for the CPI report, and if somehow we will get some bounce or some upward performance, most probably we could consider another chances for taking a position in 2045 area. This picture, although we do not have the hand shoulders on the hourly chart, but regardless triple to buy, is very similar to what we have on the euro currency. So that's why this choice is up to you. So if you do not want to take the risk of the CPI report, just wait and see what will happen. If you're ready for that, you could try to take the minor position around this area and then see what will happen. The market will jump up to the 2045. We will consider another opportunity for taking the position. The one thing that we would like to avoid here is very fast and explosive upward action. But this could happen only if inflation will drop just miserably, significantly, so which is not anticipated right now. So let's see what will happen. In general, we could say that gold for now keeps the bearish context. We do not have so strong signs on the bullish side that could let us to tell that indeed bearish context has failed. So nothing criminal here and well, mostly it looks like the retracement before a possible downward continuation here. So let's see.